In this video I'm explaining the MACD strategy that you can use it to identify the momentum in a new trend, whether it's bullish or bearish. The moving average convergence divergence, or also known as the MACD, is one of the most simplest and popular indicator used by traders. Essentially, it is a trend following indicator that shows the relationship between two moving averages. With a MACD chart, you will usually see three numbers that are used for its settings. The first is the number of periods that are used to calculate the faster moving average. The second is the number of periods that are used in the slower moving average. And the third is the number of bars that are used to calculate the moving average of the difference between the faster and slower moving averages. For example, if you were to see 12, 26, 9 as the MACD parameters, which are usually the default setting for most charting software, this is how you would interpret it. The 12 represents a moving average of the previous 12 bars. The 26 represents a moving average of the previous 26 bars. The 9 represents a moving average of the difference between the two moving averages above. Before we start, we first need to know how does the MACD work. So we can see here, there are four components to the MACD. First, we have these two lines, the MACD line and the signal line. The MACD line moves faster and is more sensitive to price changes, which will be the main focus of the MACD indicator. Compare that to the signal line, which reacts slower to price changes, therefore giving it a more smoother appearance. Next, we have the histogram, which represents the difference between the MACD line and the signal line. For example, if the line crosses above the signal line, the histogram will turn green, and if it crosses below, the histogram will turn red, the gap between the MACD line and the signal line. Finally, we have the zero line, which simply represents the center of the MACD indicator. Now, the way traders utilize this indicator to identify momentum is by looking at the crossover between the MACD line and the signal line. Let me show you an example. If the MACD line crosses above the signal line, it indicates that the market is on an upwards momentum, and if it crosses below, it indicates that the market is only downwards momentum. Traders can also utilize the size of the histogram to determine the strength of the momentum itself. If the MACD crosses above the signal line while the histogram is getting larger, it shows us that the upwards momentum is getting stronger. Similarly, if the histogram is getting smaller in size, it indicates that the upwards momentum is getting weaker. Now let's talk about the different strategies that you can use with the MACD indicator. So first, a common mistake that traders make is that they're using the indicator by itself. Let me show you why it's a bad idea to use the MACD alone. So here we can see that the overall market is only downtrend. However, the MACD is crossing over upwards. So notice how the signals are contradicting. The MACD is indicating a bullish momentum, but the market is only downtrend. This is exactly why you shouldn't use the MACD by itself, because what the MACD is showing us is only the short-term momentum, and as traders we also need to take the long-term trend into consideration, because we never want to trade against a trend. And so a simple but high win rate strategy that I recommend for beginners is by combining the MACD with a long-term trend indicator like the 100-day moving average line. This way we can safely trade the MACD while making sure that we're staying within the same direction of the long-term trend. So this is how you trade the strategy. The first step is you want to identify the long-term trend by looking at the 100 EMA. If the price is above the 100 EMA, it indicates that the long-term trend is up, and if the price is below the 100 EMA, it indicates that the long-term trend is down. So once you've identified the trend, the next step is we want to look for crossovers on the MACD that shows the same signal as the long-term trend. So in this particular example, we can see that the long-term trend is up, meaning we only take signals when the MACD crosses over upwards. And so here's where you want to take a long position. Now for your exit strategy. This trade ended up being profitable. I just revealed to you high win rate MACD strategies that you can immediately use right now. Thanks for watching. Please don't forget to click subscribe if you want more weekly updates on investment strategies.